Trading is risky. Most people lose money. Past performance does not indicate future results. Let's go. In this video, I will discuss the volume profile and how I use it for scalping. There's two ways that I use it. And since kind of delving into order flow, the volume profile has become the single most effective order flow tool, in my opinion. And it's the backbone of my scalping strategy that I use at the moment. I employ the same scalping strategy every single day on the S&P. And if I had to choose just one order flow tool, it would be the volume profile. So I'll break down, number one, the mechanics of the volume profile, explain what it's showing, how to read it, and then I'll break down the two ways how I use it to inform my daily levels of interest and my scalping as well. So you can see it on the screen here. This is just on TradingView. I personally use Top Step X to execute my trades, but same thing. TradingView is right here. I'll show you how to set it up shortly, but this is your volume profile here. So what it does is representing trading activity at each price level. Okay, so it's irrespective of time. Time is irrelevant when it comes to volume profile. It's just showing at each price level how much business is actually executing on each tick. What this does is it helps us to understand, like I said, number one, which price has the most interest from buyers and sellers. I'll tell you why that's important in a moment. And number two, it helps us to understand where fair value is. So a good way to think of the volume profile is as a visual representation of transactions for a product. So imagine you're given a data set showing sales data for a sweaty green apple, and this represents the sweaty green apple market as a whole. So you can see here that at a price of $3, we have the most interest from both buyers and sellers right there at the $3 level. Where the most sales are happening and where the most buying is happening is at $3. So an abundance of buyers willing to buy and of sellers willing to sell at that same level. However, below $3, interest starts to dwindle out. Sellers start to lose interest as indicated by lesser volume. And above $3, buyers start to lose interest as indicated by lesser volume as well. So we can logically conclude that if you're in the market for sweaty green apples, fair value for a green apple is $3. If we were in the market as a seller, there would be no shortage of demand to buy from us at $3. And if we were to seek to buy a green apple, there would be no shortage of supply at $3 either. Okay, so that's where the market is determined fair value is. So with that in mind, if we take it back to the charts here or to the markets, we look at the volume profile again, those areas there where the highest amount of volume transacts, those are the first important things I'm looking for when using the volume profile, because that represents an area of fair value and it represents an area where both buyers and sellers are willing to engage. And what we call that is the area with the highest volume on the volume profile is automatically marked out with a red line, and that is known as the point of control. And then any other area that sticks out but not quite as much as the point of control are known as high volume nodes or HVN. So we got point of control, POC, and high volume node. So on this particular volume profile we're looking at here, see one point of control and one high volume node. That's what I'm looking for when I'm looking at a volume profile. I want to see where all the high volume nodes are and obviously where the point of control is. As price moves up and away, you'll find that the high volume nodes often end up developing into the new point of control as price continues to move and as volume builds at these next price levels as we move up. And just like in any market, the stock market is constantly seeking fair value. So as price, like I said, as it moves up and away, or if it moves down, it will build out new areas in the volume profile of fair value. But the important thing I want to highlight about these high volume nodes and point of control and the way that I use them is that these are often used as support and resistance levels. So the reason being is because the market determines these price levels as fair value, the market is less likely to blast through these levels. So you'll often find you can catch a bounce from either side of these high volume nodes or point of control. As we're above, you find we bounce from it. And as we're below, you find you bounce from it as well. In this particular conditions, the market's feeling more bullish, so on the upside gets the better reaction, but that's the general idea. And you'll see as well with this high volume node here, if it extended out, you'll see the market also bounces from that as an area of support as well. And as you can see, volume starts to develop more as it moves up. And like I said, this high volume node now, that was previously a high volume node, has now become the new point of control, and the market will continue to develop areas of fair value as it moves up or as it moves down. So because price is less likely to break through the high volume nodes and point of control, they often provide good potential entries for scalpers especially. And my bread and butter setup, which we'll get into more soon, but just briefly, is looking for bounces from these high volume nodes and point of controls. When we approach these levels, I do use the DOM and cumulative delta to kind of inform my trade before I make the decision. I'll cover that a bit more in next week's video. But anyway, I'll show you how to set this up for both scalping and my higher time frame levels. Let me show you how to do this in TradingView and set this up for determining higher time frame levels, points of interest to look out for on each trading day, because higher time frame levels are important to look out for, and the volume profile is perfect for doing this as well. So let me just full screen trading view here so you can see all the tools, and I'll run you through how to set it up for high time frame. So if we start with this is the S&P 500, imagine it's Tuesday 9:30, which is coming into the futures open. What I do is I look at the previous day first. All right, so we got Tuesday here, Tuesday's trading day. So I'll go back, mark out midnight. Okay, so this is Tuesday, the current day, and then I'll go back and mark out midnight for the previous day. So midnight to midnight Eastern time, always Eastern time. I have that marked out. So it's Monday, that's the previous trading day. What I'm doing is then you click on indicators, and the first volume profile that I'm using is this one. Fixed range volume profile on TradingView, okay? Click that. And then that'll allow you to then draw from your chosen range across a volume profile. Okay, so you can see that is Monday's volume profile. So the previous day's profile, if I'm trading Tuesday, that is the previous midnight to midnight, all the trading activity that occurred in yesterday's trading day. And you can see here, we've got its volume profile, we've got the high volume nodes, the point of control. What I'm marking out for my high time frame levels is, notice how on this volume profile you have an area that's bright and an area that's dim. The bright area just represents what we call the value area. That's where 70% of the trading volume occurred, is in the value area. And that's related to the same type of logic as a bell curve. You know, the bell curve, you have 70% are where the majority lie, and then you have the outliers on either side, on the other sides, right? All this volume profile here is doing 70% where the most trading volume occurred, and we call that the value area. And what I'm marking out is marking out the value area high to the highest point in that value area, and then the value area low as well. All right, so that's value high, value low, and then that point of control there, since it stops, extend that point of control out as well, labeling these. I put the value area high in white, labeled PDVAH, previous day value area high, PDVAL, previous day value area low, and then obviously the red line, PDPOC, just so I know and can reference these in the current trading day. Pay attention to these levels during my trading session. Even if you trade the overnight session, we drop down to the lower time frame. Look at a 5-minute chart and see how price reacted, okay, to the previous day's point of control, even on the overnight session. Resistance, resistance, broke through, came back down, support, support, broke through, came back down. And when we reached the value area low, which is this line here that we marked out from the previous day, look how price bought back up from there as well. Kind of tapped it the first time, jumped up, came down, previous day value area low, jumped up. So I like to reference these during the trading day. They are very powerful, very potent levels. Those value area highs and value area lows are good for looking for reversals or to use them as support and resistance as well. So those are my higher time frame levels to pay attention to. Rinse and repeat every single day. So I have those levels on the chart for reference. Now, in terms of scalping, because obviously I'm not sitting around all day waiting for those value area highs, value area low, and previous day point of control to be hit. I am scalping in and out of the market during my entire trading session. So how I inform those trades is, if we're nowhere near those higher time frame levels, I use this volume profile. So if you go back to indicators again, and for this one you type in visible range volume profile, what this will do is it will have a volume profile placed on the chart just for the range that appears on your screen. So it's different depending on how zoomed out you are, what time frame you use, but it's basically showing the volume however recent you want it to show. So for me, what I like to do is I turn off all the colors on the volume profile. I'm just interested in how much volume is at each level, not so much the distribution of buying and selling, and I'm also not interested in the colors. So change all the colors to white just for simplicity's sake, and keep the default settings. Then I like to have my chart. I trade the 30-second or the 15-second charts, depending how volatile the market is. Zooming into the point where we can see roughly the last 30 minutes of price action, keeping very zoomed in. And then I'm trading from those high volume nodes, using the DOM and cumulative delta to inform my trades, whether long or short is more favorable. Whether I wait, say if we approach down to this high volume node, this point of control, whether I wait for it to push through and go short from the other side, or if I just take a long from us trading down into it. I use cumulative delta and the DOM to help me decide when to do that. I'll talk more about that in next week's video. But again, you can see that back and forth action that happens at each of these high volume nodes. Bounce, 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 bounce. Trade down, retest, drop, bounce, trade up, retest, drop, bounce, drop down, bounce from the underside, drop. So whilst I mainly do trade from these shorter term levels, if we end up trading into those higher time frame point of controls and value area highs and lows, I consider those higher probability levels to trade from. And I also don't want to counter trade those levels either, those higher time frame levels. So if this is the previous day's point of control, we're coming up and then I see a nice little setup on the lower time frame to go long from a shorter term high volume node, I don't want to go long into the underside of the previous day's point of control because that'll be going against the higher time frame level. I'd rather wait to see if I can short from the previous day's point of control instead as the more probable trade. So that's the backbone of my volume profile scalping strategy, guys. It's how I'm discretionarily scalping the markets up and down, roughly 2 hours per day across my 7 accounts, 6 prop firm accounts and the 1 personal. I'm not copy trading. I like to spread my risk out, but each sees roughly 14 trades on average. So I'm trading a lot of times throughout the trading session. I like to stop when I reach either plus 300 or negative 300 on each account and then jump to the next one. And typically, depending on the volatility, if it's a very volatile day, I'll just use 1 contract. If it's a slower day, I'll use 2 contracts. And I'm normally aiming for 2 to 4 ticks per trade from each level. And that's just my personal preference. Not everyone uses the volume profile for those such small time frames and small trades. You can use the same principles here on higher time frames. Just fit it to suit what you prefer. I prefer the higher frequency, lower time frame stuff. So it's just what I found as my personal sweet spot and has been the most consistent for me. But like I said, some people like to take larger swings at a time rather than just taking a few ticks, or others like to trade the higher time frame levels, bigger trades but less frequency. But at the end of the day, you just need to figure out what works for you. But however you use this information, the volume profile is one of the most undeniable order flow tools. Everyone uses it slightly differently, but the principle behind it, determining where fair value is and determining which price levels have the most interest from both buyers and sellers, is extremely important in your trading. Use it to confirm your levels, use it to trade with, use it to form your strategy, whatever you see fit to use this information for. I hope you found it helpful. That's the gist of how I use the volume profile. And it most certainly can be beneficial no matter your style of trading, in my opinion. So if you enjoyed the video, guys, next week I'll be making a video on cumulative delta, which is the next tool that I use to help inform my scalps, inform my trades. And I'll break down how you can read that, how to use it in everyday trading as well. That's next week's video. But if you are interested in this type of order flow trading, every week I release an article/newsletter deep delving into my order flow research, sharing the information that I find helpful from order flow. It's hard to find good order flow information on YouTube, so I'm compiling all the best stuff and simplifying it and putting it out through my Substack, which will be linked in the description below. Otherwise, subscribe and like the video, and I'll see you guys next week. Take care.